What's going on, ladies and gentlemen, boys and girls, and children of all ages? What is going on out there in the world? Of course, we've seen the market come down again. I just did a live yesterday, and I'm going live again today because, as you can see, I know my lips might seem a little shiny, but I had to make sure I wouldn't ask you. But as you can see, today is the second day that we're almost at 1,000 point drop. Yesterday we seen the market come down 1,000 points. Today we've seen another 1,000 points due to the coronavirus kind of spreading and whatnot. And I didn't want to come here and state the obvious. I didn't want to come here and state the obvious and saying, hey, look, the market is down, buy, right? We kind of got that. I did that yesterday. What I want you to do is take this as a learning opportunity to look at, okay, the market is going down. Where am I going? Right? So what is going up while the market is going down? Jay Biz, what's going on? Jay Biz just came in and said the SPY is dumping and his 325 puts are killing it, right? So that's another thing, put options. So I didn't want to come in here and state the obvious. When you look across all the sectors of the S&P 500, all sectors are down, right? You're looking at, we're talking about consumer staples, utilities, technology, financial, industrial, consumer discretion, health, communication, material, information technology, energy, and real estate. Hit the thumbs up button as you guys and girls coming in catching this live. And these staples, and I'm going to go through them. All of these are the major indexes. All the labeled 11 major indexes. All of them are going down. And he said insane flash crash. Yeah, just came out of I won't say came out of nowhere. It pretty much came out of nowhere. But that's where all of the bears come out. The bear kind of catch you when you're sleeping, right? Anything can take the market down. But I take this as a buying opportunity. But I'm going to ask you this question. Yes, the obvious is everything is going down. What is going up? When you look across the board, what is going up right now? In the index, the S&P 500 index, the thing that's doing the worst right now is energy stocks. Energy stocks are getting hit the worst. Followed behind number two, it was energy and industrial. No, no, no. Energy and technology. I'm sorry about that. Energy and technology are uh, the ones that are getting hit the hardest, which is pretty much should be expected. Energy and technology stocks are the ones that they have extreme highs and extreme lows. So when the market's going down, they're going down. But J Biz, you're correct. The thing that is going up today is BLVILTB, long term bond indexes, right? And gold, James Bond just said gold. But the thing about gold is gold right now, gold has it hasn't failed, but it hasn't really gained either. It's been a little low. So even gold has taken a hit. But the top two things that haven't taken a hit are consumer staples and utilities. Who out there knows what consumer staples are? Consumer staples index and consumer utilities haven't gone down. We spoke about utilities earlier when we talked about market when they come. And the reason why I'm bringing up this topic is I've sat back and I told you guys and girls the market will go down. The market will have corrections. We all know that. I mean, it doesn't take a rocket science to know that. But I want you guys and girls to pay attention to when the market goes down, um, who or what places of kind of a safe haven. No matter what goes in the market, people will pay for lights, water, gas, everything like that. You know, and consumer staples. Max B, what's going on, Max B? Max B said things we buy. Consumer staples, Max B, I would say you're wrong on that because things that we buy are consumer discretionary. That index. Discretionary means what we decide to buy. Consumer staples are what you just said, Max B. You just said Walmart, Coca-Cola. Those are staples. Those are things that are like people will brush their teeth, hopefully, like Colgate. People will still smoke cigarettes, unfortunately. I mean, I won't say unfortunately because I don't smoke, but I do drink, so I can't sit here and say anything bad, whatnot. But Walmart, things people will still go to Walmart. People will still buy Coca-Cola products. People will still smoke cigarettes. People will still buy bread. These are staples in the community, regardless of what's going on or whatnot. Those are consumer staples. That's the index that's been holding up the most, which is not surprising. The other index that's been holding up the most is consumer utilities. No matter what we do, utilities are our lights, our water, our gas, our electric. These are things that we will use, regardless. So even they haven't grown in this flash dive that we've seen. They haven't grown. They've kind of stayed staple. But the thing is, what has gone up? The only thing on the market, the only index or area that has gone up is bonds. And everybody out there, give me a thumbs up. If you remember when I told you guys this a million times before, when I said there's people like Prince, what do you do with your cash? Where do you hide your cash? I said, hey, I hide my cash in bonds, BLB, long-term bonds, because guess what? They pay me dividends every month. They earn about 3% a year in dividends. And now I'm selling those bonds. You see those bonds going up. They went up yesterday, they went up today. I'm selling those bonds to buy myself something like QQQ or TQQQ or technology stocks, you know. And J. Stay Hip said bonds are traditionally safe haven. Now, the thing about it is, bonds will not grow as fast as other stocks, but they grow faster than cash. The other index is cash. You can just keep your money in cash. So I got a little money in cash. So I'm taking money out of cash and I'm taking money out of my bonds that have gone up. And I'm what you call it. When I look across the index, everybody's getting hit upside the head, right? I mean, I just called it out. The only ones that are really not as getting hit that bad. Now, granted, I don't want to sound like I'm running over myself, but I know people out there going to say, "Hey, if you buy puts, yes. If you buy bearish ETFs, well, if you have bearish ETFs, you can make money that way. If you have puts, you can make money that way. But those are very risky because tomorrow, this whole thing, it's like a rubber band, right? You get a rubber band, you get that pressure when you pull it down. What happens when you pull a rubber band down and you let it go? Right? Because while you some when all this is the coronavirus, this is the stock market. This is that little rubber band. It's pulling it down, pulling it down, pulling it down, pulling it down. When that scare goes away, you're gonna let it go, and you're gonna see the market. It's not even gonna go higher. It's probably gonna go back to where it came from. And if you're the person that are buying puts, if you're the person that buying bearish ETFs as the market is going down, you can get caught at the wrong time and that rubber band can let go. Because if you pay attention to the market day, it started off 100 to 200 points up, right? Before it went down. So that's the risk with trying to jump on puts. That's the risk with getting bearish ETFs. That's the risk with trying to get things, trying to, ride the down arrow. Because make no mistake about it, we're still in the bull market. Now, from the last time since it's live, we're 1,200 points away from going into a correction. So right now, with 1,000 points yesterday and about 1,000 points a day, that's 2,000 points coming off of a high. We need a 10% drop. We need 2,900 point drop to hit correction status. So we haven't hit correction status yet. We're getting close there, but that's a good thing. Okay, I don't even know what that ticker is. Who is this that says Ghost Hunter? The Ghost Hunter said he brought a ticker of MNRA, I think that was, who brought shares at 1550. He said they're doing pretty good. Now, granted, there are some individual stocks doing well, like Honda and some other rent and Rolls Royce. That automotive industry seem to be doing well for some reason right now. But I don't want to what to call it. Okay, oh, that was something else. But I don't want anybody to look at that and say, "Oh, this is the great industry," because the automotive industry, they're just having a good second, right? That's not a good industry, I would say. But across the board, across all the major indexes are down. Yes, you're going to have some individual stocks, some penny stocks, some Rolls Royce or Honda, some individual stocks. They're always going to do well. But we look across the board, everybody's down. The people's getting hit at the hard, technology stocks and energy stocks. But that's to be expected. The NASDAQ will always get hit the hardest. It will have extreme lows and it will have extreme highs. So when the market goes down, it will really go down. But when the market really goes up, it really goes up. I take advantage of that because I'm a long-term person. Now, I wanted you to pay attention to bonds, right? And I wanted you guys to see, guys and girls, to see what the whole market is down. Gold is down. All the major indexes are down. Everybody's down right now. But you see bond, BLV, Bravo Lima Victor, or India Tango Lima Bravo. You're seeing those long-term bonds indexes. They are peaking their head and they pay monthly dividends. And you're seeing that, hey, look, and then I can get in and out of them with no trade fee. That's where I hide my cash, right? So even though the market is tanking, my BLV section is going up, and that's the place. I can use my cash. I can use those bonds to cash out and be able to buy other things. So I wanted you guys and girls to pay attention to that. Pay attention, do some research. When you see these things going down, pay attention to what is not going down, who's really going down, right? So that's what I want you guys and girls to see. What is going up, take advantage. But that's what I want to leave you guys and girl with real quick. Hit that share button, hit that thumbs up button. And if you're somebody who's been really following me, like the people like Max B, J Biz, y'all know I've said this plenty times. Y'all heard me say this plenty of times before, but now you're getting to see it in real life. You're getting to see, wow, what he's saying is true because I can apply it to the real market. Because I like to look at how the market react to certain things. I'm still a long-term person. I think this coronavirus thing, yes, it does tie to the economy. I think it's a little bit overreaction. I think it's behavior, right? And it will pass on to you look at companies like Procter and Gamble. Just yesterday when I went to the post office, there's like, hey, we're not flying to China. So it is affecting the economy overall, right? It is affecting the economy overall, but do research and see what is not going down, what is actually going up when everybody is going down. These are places that people kind of look at as safe havens. These are places you can look for cash. And I really want you guys and girls to test my theory of what I've been saying all along of individual things, places you can place money to be quote unquote safe havens that are better than cash. This is the time to be selling those things, getting into what you call it. And plus, I get a million emails, text messages, phone calls. For everybody that's text me, DM me, email me, I'm not ignoring you. It's that in 2020, I want to take more time of studying. Right, I've been in this room. You can see I got red eyes. I'm studying. Right, I'm taking my time to study to see what's going on versus I spend so much time going to people's emails, DMs, because it's not a quick answer. I have to look at your situation, think about what you're going before I even can say, well, this is what I see, or whatever the case may be. So I had to take that time to study because in this bull market, we haven't seen any major pullbacks in a little while. So when we get them, I like to really study pullbacks. I like to test theories where I was wrong at, where I was right at. One of the things that did shock me, I'm shocked that gold is not up. I'm shocked that gold is it's not down, it's down a little bit. It's right there with consumer staples and utilities, but I was expecting gold to be up. So that's a little surprising. But I like to pay attention to those things. So I haven't been ignoring your emails or why I want to answer the phone or why I want to answer my DM. It's just I have to take these opportunities to study, perfect my craft. But anyway, I want to leave you guys and girls with that. Pay attention to it and, drop some comments below if you know something different or whatnot, right? But anyway, until the next video podcast. He said I need Costco to go down. Max B, I'm Costco's on my waiting list too, on my watch list. So yeah, Costco's is a good one too. But look across the board. Look, pay attention to sales. Take advantage. This is a great thing for you, long-term investors, especially young people. My nephew texted me last night and said, "Uncle, what should I buy?" And I love that. I love that he has an uncle that he can reach out to and talk to when he's starting to invest. He's 18 years old. He just enlisted into the army, so very proud of him. Versus when I came in, I didn't have that person to call, but that's how we change the world, right? Go stay his butt. It was right after a decent climb. Yeah, that's when we the market takes the stairs up, but it takes the elevator down. It goes up like this. It doesn't just. It's very rare. The whole market itself just goes like a rocket. It kind of does takes the stairs up, but when it comes down like an elevator. That's why I always kind of told you guys and girls, hey, keep a little bit of cash, keep a little bit over here so you can buy the next downturn. Because what you don't want to do, like it was my nephew called me last night for prime example, what should I buy? I said, well, he said, I have this much cash. I said, well, buy, if you got $400, buy $100 of XYZ, right? That's not really the symbol I said, but just buy this. I told him, hey, if I was you in your situation, I would buy something like this, right? He said, why not invest all of it? I said, keep cash because it may drop again tomorrow. It may drop again the day after that. And the last place you want to be is to see a down economy with no cash, right? You don't want to be in a down economy with no cash. It's like a sale going on and you ain't got no money to be able to go and take advantage of a sale or a clearance. So keep some money in cash and things like that. But anyway, I got to get going. I just want to leave that with y'all. Give me the thumbs up button if you like the content. Hit that share button. Hit that like button. Hit that subscribe button. Check us out on all of the check out the audio experience on all of the major podcast outlets. Follow me on Instagram, Facebook. We're on iTunes and all that other good stuff like that, right? So follow us on there to get the audio experience. Also follow us on check out all the good things. One more last thing. I'm gonna take this last question. Ghost had said, sorry, I was referring to what you said about gold going down, but yeah, I was surprised it went down too. And then, okay, Ostrich said, appreciate the video. Say, no, I appreciate you guys for tuning in. If you guys and girls wasn't tuning in and watching, I wouldn't be where I am today, right? Um, yes, you're right. Yeah, he said, sorry, he was referring to the gold. Yeah, because gold had a nice climb, then all of a sudden it went off. So usually when the market is going up, gold is going down. But gold had been going up with the market. When the market goes down, gold go with it too. That was a little fishy right there. But hey, learning experience. This is how you gain experience over time. But I want y'all to take this as a learning experience. I got to get out of here. Thank you guys. Appreciate you guys. Love you. Peace. I'm out. Thank you.